On this episode of the Realist State, we're going to be talking about the impact of rising mortgage rates on homeowners, home buyers, and investors. Stay tuned. Hey everybody, it's your favorite realtor, Byron J. Elliott. We want to welcome you to this week's episode of the Realist State. It's our goal on this podcast, on this platform, to discuss those things that are meaningful to the folks in our communities about how we can move forward and be empowered, utilizing real estate as a tool, financial empowerment. We like to tie in faith into the conversation. Of course, we like to tie in family. And to that end, want to welcome our brand new and beautiful co-host. She's my favorite realtor. Her name is Bryonna Elliott, the newest realtor with eXp Realty in the Lynchburg area, and we're excited to have her here. Let's give her a big round of applause, real estate family.
Hey everybody. I'm so glad to be here.
Yeah, you're in the house. How's it been since you've been rocking and rolling in real estate? You've been really making some waves out there.
Yeah, it's been really cool. I mean, like I said, I believe in the last episode, I'm just really enjoying the networking and the connections being made. We've been putting in some long hours, some real hard work these past couple of weeks. So it's been it's been a lot, but it's been very rewarding at the same time. So I'm really enjoying it so far, and I can't wait to keep going further.
Yeah. You got your hands in some deals. You've been working on some. You've been working with renters. You've been working with. You've got a couple of listings going.
Yep.
And we got a couple of sales on the way to closing.
Yep.
Go ahead, girl. You better get it done. Listen, if y'all want to deal with the one of the most insightful and I think effective realtors that is on the rise, hit up Bryonna the realtor, and we'll make sure you have all her contact information. So today we want to talk about kind of the state of the market and what's happening out here in the real estate industry. And one thing that is for sure, it's not like it's ever been. Interest rates had been dropping all the way till earlier this year. They were as low as 2.65%, which in my lifetime, that's as low as it's ever been. And I ain't gonna tell you how old I am, but yeah, that's as low as it's ever been.
Well, we could just say in my lifetime.
Okay, yeah, in your lifetime, it's been low. And so that's been a really good opportunity for a lot of folks. You know, the housing market has been on fire pretty much nationwide. You're dealing with circumstances where there's low inventory. I don't know if there's anyone listening who's been trying to purchase a house, but it's not been easy. Yeah. Most of the things on the market are selling even higher than their list price, and you know things are kind of challenging out there because of the economic opportunity in real estate these days. We've been trying to tell you now's the perfect time to make your purchase or do what you want to do to make some investment in the real estate market. But then if you pay attention to how the trend has really gotten to this point, you'll see that back in 2018, rates were as high as 5%. And then in 2019, they dropped into the mid to high 3% range. And now we were looking earlier this year at 2.65%. Well, I think we may have found the bottom of that rate drop, if you will, because it seems now that in the last week or so, and we'll see what's going on as things unfold, but in the last week or so, the Fed has caused the rates to begin to tick back up. And I believe they are hovering right at the 3% range right now, just below 3%. So the interesting part about that is that is exactly what will impact your monthly payment as you make a purchase. So Bryonna, talk a little bit about what some of the impact of of the low rates has been on the market.
Yeah, so because the rates have been so low, people realize that at that point, home ownership was a lot more affordable than it's been in past years. So that has caused inventory to bottom out. We're talking low inventory like we've almost never seen before. Meaning maybe 8 houses on the market within a client's price range, things like that. And so that has caused home prices to rise because, the simple principles of supply and demand. If there's very low inventory, people can charge a lot more for their houses. And so we can sort of expect to see that if we are getting higher interest rates, we can begin to see the opposite to happen. So we are forecasting possible lower home prices, but like we said before, interest rates are rising. And so what does that mean?
Well, I'd say there's several things that we've got to pay attention to, because you make a good point that the lower rates have also caused inventory to be extremely low. One little point I want to make in there is that a lot of times home buyers, those looking to purchase a home, first-time home buyers, or those looking to purchase a second home, or maybe even get into the investment market, a lot of times we don't realize that you're competing for those homes with investors, and those people who literally are in the business just to buy homes. All they do every day is buy and sell homes. And so you've got home buyers trying to make reasonable offers on these properties, but these investors are willing to overpay or overbid on the same properties, because if you as a consumer are getting low rates, then so are the investors,
right? And
they want to deploy that money, and so it does create a little bit of a challenge. There are some things we can do. All hope is not lost. Of course not. First, the best thing we can always do is kind of educate ourselves about the market, about trends, about the impact of those interest rates. Now, I would say that it's important, before we get into, we'll talk in a few minutes about what steps we can take to best arm ourselves in this type of a market, to make real estate a reality for you. But I would say one of the most important things you can do is work with your lender. Work with a good lender who will then help you to qualify for a good mortgage rate, and then they will be able to lock that rate in. It's not forever. They can lock it, some for 30, 60.
I've seen up to 180 days.
Up to 180 days,
Make sure you really are talking with your lender to see what's possible for you with your credit score and with your loan amount.
Yeah. So you want to go ahead and get pre-approved and lock that rate in, so that as rates continue to rise at the federal level, you will have already put yours in place. Now, it could be that the rise in the interest rates may cause some shifts in the housing market. One of those, some ways that may play out would be that hopefully, I can't really guarantee this or really make an accurate prediction. We'll see what happens, but it could stabilize prices. The rising rates could slow down the trend and the real flood of buyers, which would then cause sellers to be more conservative in their pricing. So it could stabilize the prices. I'm hoping that we may see the inventory level rise a little bit. Hopefully folks will see that as the rates are going up, there may be some urgency to selling their homes, and you may see more homes hitting the market. But the other thing that we want to pay attention to is the fact that as these rates rise, that directly impacts the cost of home ownership. The rate that you're talking about, quite literally, is what impacts your monthly payment on your mortgage. So, Bryonna, what recommendations do you have for folks? What can we do to keep ourselves prepared to engage in this real estate market?
Well, the first thing that we are always going to tell you to do is to get connected with a credible real estate professional. Now, good thing for you, you are listening to two of what we believe to be Lynchburg's most credible real estate professionals, Byron J. Elliott and Bryonna Elliott, realtors. With EXP Realty, get connected. EXP Realty.
With who?
EXP Realty, get connected.
Yeah.
So that's going to be your first step, is to get connected with a credible real estate professional, and we can begin to guide you in the right direction in terms of your conversations with lenders and things like that.
Yeah, you want to get with a good realtor. And then most important thing you can do for yourself, and you can do this. Of course, we'd love to work with you in this process as well, and that is to work on your credit, getting your credit in a certain position that will allow you to be attractive to lenders. Now, the good thing is there are many programs out there wherein you don't necessarily have to have perfect credit, and I don't want you to be discouraged thinking that it's going to take you, a long time to put yourself in a position to purchase. But there are ways for you to get your credit looking the way that lenders would prefer, so that you can then move into the next phase of the home buying process. We'd love to work with you. We have connections with some wonderful credit repair folks, and we will be making some huge announcements in one of the upcoming episodes about our ability to provide in-house lending. It's coming to Waterwalkers LLC. It's coming. In-house lending. We'll be able to let you know that we have a lender in-house. That announcement's coming out pretty soon. But you want to work on your credit, work with a professional, a real estate professional, or even a credit repair specialist to help yourself get in position to gain better rates. Next thing you want to do is get pre-approved. Get pre-approved before you even start looking at homes. Yeah. You want to have that pre-approval in place from a lender or from your bank, so that as you see a home that you may be interested in making a move on, you're able to make your offer immediately, and you can supply that seller with your what they call proof of funds. Yeah. You can submit that with your offer.
Yeah, and I mean, just speaking as a professional working in the industry, it's very important to have a pre-approval letter because of how quickly the industry is moving. If you don't have a pre-approval letter and you're trying to look at houses, look at properties, things like that, it's very unlikely that you're going to be able to obtain that property because you don't have the steps in place ahead of time to purchase that property. So the pre-approval letter is key. We don't want to waste your time, and we don't want our time to be wasted. So get that pre-approval letter so you can rock and roll in this industry and be on your way.
Yeah, it's important. I mean, wow, have you seen some of the things we've seen just in the last couple of weeks? I've seen houses go on the market. Yeah, they'll go on the market at 9 a.m. on a Monday morning, and it's done. It's all over with at 10 o'clock, 10:30, 11 o'clock. The house is sold.
50 offers.
Yeah, you've got 50 offers all over list price, and it's important that you can present the best package possible to sellers to make yourself an attractive buyer. Another thing that you can do, we mentioned earlier that you can work with your lender. Once you've gotten that pre-approval in place, you can work with your lender to lock in that rate so that they guarantee a particular rate for you that won't fluctuate by the time you close on your property. This way, once you've gotten that pre-approval, as Bryonna mentioned earlier, we've seen them stretched out as far as 180 days. Typically, it's somewhere between 30, 60, maybe even 90 days, depending on the lender. But you really, really want to lock in that rate while the process is yet going forward toward closing, so that you don't have. As a matter of fact, you can lock in your rate after pre-approval before you even select your home, so that you know what you'll be paying when you do purchase your home. The other thing an option you do have with most lenders, they'll give you the option to do what's called a rate buy down. what that basically is, they have a particular formula put together wherein you can pay cash prior to closing or at the closing table in order to gain a lower rate. Sometimes it's as much as you can pay 1% of the purchase price in order to buy down a percent on your interest rate. And so that's a way to save money month to month, but it can be costly in the beginning. So those are some of the things that you can do. Work on your credit. Make sure you get pre-approved as soon as possible. Work with your lender to lock in that rate. You can possibly buy down your rate. What I believe to be the most important step is make sure you have a good real estate professional like myself or Bryonna representing you in the whole process. And this way you can do what it takes to take advantage of what are still extremely low rates. Now, we're talking about the rates as though they are rising, and they are. But let's keep in mind, Bryonna, we were talking earlier, you mentioned an interesting statistic about what the average rates have been over time. Want to say a little bit about that?
Yeah, so according to Freddie Mac, their fixed mortgage rate over the last 30 years has been at an average of 7.7%. So that may seem high to some people, that may seem low to some people, but if we're considering the fact that back in the 80s and a little bit before, we were looking at anywhere between 13% to 18% interest rates, but then now we're looking at 2%, 3%, 4%, 5%, and we're thinking 4 and 5% are high. That average really does say a lot. I know back when my parents bought their first house, their interest rates, they were looking at interest rates of 8.5%, and those were seen as low. So I think really putting these rates into perspective and jumping on them while they're as low as they are is really, really key to success in the real estate market and in the industry.
Yeah, very important, very important. And remember as well, this applies to home buyers, those looking to buy their home for the first time, or even buy a second home, or whatever the case may be. This applies for investors, those looking to get into the investment market, but this also applies for those who already own homes. And it may be a good time for you to go ahead and refinance out of what may have been a higher rate if you bought your home 10 years ago, 15 years ago, and the rates were higher. Then it may be a good time for you to consider refinancing and locking in at a lower rate while you still can. And so please allow us the opportunity to connect with you, and feel free to reach out to us so that we can help you to make good decisions and good choices about your home buying and home ownership experience. We thank you for joining us today. This has been a really, really interesting topic. We'll continue this conversation in the weeks that go forward. We'll have a few mortgage professionals come in and give us their take on things. And we want you to please share this platform with somebody that you think can benefit from this conversation. It's good for us to have these conversations just on a casual level. Even if you're not in the home buying process, it's good for you to have this perspective and this education so that you can understand what to do when it's your time to make a move. You can find us on all the podcast platforms, so you want to make sure you listen out for us and look out for us. Share it with somebody. You'll find us. You can connect with us on Facebook, Instagram. You can connect with us on Twitter. You can connect with us right on YouTube. Make sure when you go there, like it, share it, subscribe to it, do what you got to do. Waterwalkers LLC is here for you. We're trying to be your resource so that you can build and establish legacy and wealth, intergenerational wealth, using the tool called Real Estate. Bryonna, give them some final words.
Yeah, I mean, listen, even if you don't think that you are on the market right now in the real estate industry, you might know someone who is. Share this video with them. We are really just trying to educate you guys on what's best in the real estate industry. We got into this industry to be able to do just that, to educate and to keep you privy to how to best be wealthy and be profitable in this industry. So share this video. share our social medias. We tend to post a lot of infographics pertaining to these exact topics, and we cannot wait to connect with you next time. As we always say, take it away.
Yeah, wherever you go and whatever you do, always remember to keep it real.